I'm James Gruber. Welcome to the morning report for Monday, the 18th of May. Well, the last few weeks we've started the week talking about record highs on Wall Street, but not today. There was quite a bit of red across all major indices on Friday. In recent weeks and months, share markets seem to be ignoring rising bond yields, with the US 30-year government yield topping 5% last week. That ended on Friday evening as markets did start paying attention, with US Treasury yields climbing to their highest levels in a year. What bond markets have been suggesting for a little while is that inflation remains a concern and that interest rates in the US may be going up rather than down. If the bond markets are right and rates do need to rise, that would potentially have a negative impact on the US economy and businesses, and that's why US markets went down on Friday. And energy prices aren't helping as they spiked again on Friday evening as the US and Iran traded barbs amid heightened tensions. Donald Trump has also been on social media in the past few hours, again threatening consequences, and I quote, "The clock is ticking," and that, quote, "Iran better get moving fast or there won't be anything left of them." So let's now take a look at what's on the cards for Australia today. We're heading for a lower open to start the trading week. When the ASX futures were last trading, the index was down 0.4%. There's a bit of play for investors here locally this week. The minutes from the RBA's decision to lift rates on May 5 will be released tomorrow, while unemployment figures are out on Thursday morning. Those figures will show how jobs are holding up in the face of rising interest rates and a slowing economy. And a recap, the ASX 200 closed lower on Friday, dropping 0.1% to 8,631. Let's turn to oil and other commodities. Global oil prices jumped on Friday. Brent crude futures settled up 3.3% to $109.26 a barrel. Base metal prices were lower on Friday as a stronger US dollar triggered profit taking. Copper futures dropped to a one-week low, down more than 5%, while aluminium futures fell 2.7%. Meantime, gold futures fell to a one-week low as well, as heightened inflation concerns due to the Iran war reinforced bets for higher interest rates. The futures settled 2.6% lower at $4,562 an ounce. Iron ore futures slipped 0.3% to $110.77 a tonne. Let's turn to currencies. The Aussie dollar was last trading a little lower at 71.52 US cents. And taking a step back now to see how Wall Street and other world markets did. The Dow Jones index finished down 1.1%, the S&P 500 index was 1.2% lower, and the Nasdaq index lost 1.5%. A closer look at the trading day there, US markets retreated from AI-fueled record highs on Friday, as those spiking crude prices and bond yields ignited global inflation fears. Among the 11 major sectors in the S&P 500, energy shares jumped 2.3%. The 10 remaining sectors lost ground, with materials and utilities suffering the steepest percentage losses. The semiconductor index slid 4%, dragged lower by stocks that have benefited from the AI hyperscaler phenomenon. Nvidia and AMD fell by 4.4% and almost 6% respectively, while Intel dropped more than 6%. Microsoft rose 3.1% following the disclosure of a new position in the company taken by Bill Ackman's hedge fund Pershing Square. Dexcom jumped almost 7% following the medical device maker's announcement that it will appoint 2 independent directors and revamp a board committee in collaboration with activist investor Elliott Investment Management. Ford dropped almost 8%, retreating from a near 21% surge over the last 2 trading sessions on optimism over the automaker's energy storage business. Meantime, US government bond yields climbed to their highest levels in a year as a spike in oil prices tied to ongoing energy disruptions due to the Middle East, inflation concerns, and expectations for a stronger economy led investors to re-evaluate where interest rates are likely to land. The US 10-year Treasury yield was 11 points higher to 4.59%, while the US 2-year Treasury yield was 9 points higher to 4.08%. Moving to European markets now, the continent-wide FTSE Euro First 300 index ended down 1.6%, while the UK FTSE 100 lost 1.7%. So European markets slid and logged weekly losses on Friday as concerns over energy-induced inflation pressures due to the US-Iran standoff rattled global markets. Semiconductor firms paused their recent rally, with ASML and Aixtron down 4.4% and 6% respectively. Economically sensitive cyclical sectors also came under pressure, with banks dropping 6% as BNP Paribas and Deutsche Bank lost 3% and 2.6% respectively. Among others, LVMH dipped more than 1% after the conglomerate agreed to sell fashion brand Marc Jacobs. Stellantis fell more than 4% after the carmaker signed a roughly €1 billion deal with China's Dongfeng to produce Peugeot and Jeep branded vehicles. So let's now take a look at what's on the watch list. In the US, there are Nvidia's results on Wednesday US time. And on Friday, Jerome Powell's last day as the US Federal Reserve Chair, he's being replaced by Kevin Warsh. Warsh was nominated by Donald Trump. In Australia, ALS, New Hope and Elders are reporting results today. Macquarie Bank and Alcoa are also trading ex-dividend. In China, there's a deluge of data released today, including industrial production, retail sales and unemployment figures. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.